Electricity prices to rise as the cost of living crisis gets worse. Labor confident of getting an absolute majority in Parliament as the Liberals try to recast Peter Dutton. And the on and off bid for one of Australia's big tech companies. It's Friday the 27th of May 2022. Welcome to Fear and Greed, Australia's most popular business podcast. I'm Michael Thompson and good morning, Sean Aylmer.
Good morning, Michael. Now, before we go any further, I have to give you a correction. Remember yesterday we were talking about laptop classes, the laptop class moving out to the suburbs. Lucy Ellis, the Assistant Governor of the Reserve Bank, said it yesterday, and we said that she deserved to be able to use the term laptop class. In fact, I think we said Lucy invented it. Well, I've got to tell you, I got a message from Lucy yesterday, and she said, "Thank you for your kind words. Full disclosure, laptop class isn't an original turn of phrase." So Lucy didn't come up with it. It gets used a bit in discussions about COVID response in public health epidemiology circles. So, Lucy, we did give it to you yesterday, but we're taking it back. Apparently, laptop class has been around for a little while.
Oh, I was very, very happy for Lucy to take the credit on that one. And
So was I.
look, that's a very honourable thing to do, to own up and say, no, I didn't come up with it. If that was me, I'd be running with it. I would be credited for all of history now as the person who came up with the term laptop class. So good on you, Lucy.
I might just ignore Lucy Ellis's honesty to me and just keep giving her credit.
I thought you were about to say you'll claim it as your own.
Well, that might happen too.
That is a new low for Fear and Greed. Well, there we go. That's pretty good feedback, actually, and great to know that if we get something wrong, it's going to be corrected by the source itself.
Yeah, pretty good, pretty good.
Now, Sean, you've got a really interesting chat coming up after today's show, and I'm really interested in this one because it is essentially a snapshot, a really kind of detailed snapshot of the electric vehicle market in Australia with Tom White from Cars Guide.
That is a perfect description of it, a detailed snapshot. I'm not sure whether that's actually, you can say a detailed snapshot, but that's pretty much what it is.
That's coming up a little bit later on. But the main story this morning, Sean, many Australians are about to start paying much more, potentially a whole lot more for energy. With the regulator greenlighting a price hike from July 1, it adds really to the growing list of higher prices for households.
That's right. If you thought the cost of living was rising too fast, it's going to get worse. We now, Michael, have very high petrol prices, near record highs. Many fruit and vegetable prices are rising. Do you remember a few weeks ago, the bosses of Woolies and Coles talking about avocado prices not rising? Well, they are, definitely. We've got interest rates rising, so people paying more on their mortgage and loans. And now energy prices in New South Wales will rise by more than 8%. They'll rise by more than 5.5% in Queensland. In South Australia, they'll also be up, though by a smaller amount. Small businesses face an increase of up to 13% in their energy costs. Higher wholesale prices, the war in Ukraine and soaring coal and gas prices have forced the Australian Energy Regulator to lift the default price, allowing energy retailers to charge more. Now, the AER chair, Claire Savage, said retailers need to recover their costs or risk going out of business. That is actually what's happened in the UK. She said householders should shop around to get the best deal.
So, Sean, it's another big whack to the cost of living. So surely this all adds pressure on the Fair Work Commission to grant a significant rise in the minimum wage.
Yes, it does. I think that the Fair Work Commission announcement will be one of the most watched of all Fair Work Commission announcements when it does come out in a couple of months. The Fair Work Commission will take submissions until June 7, then it goes away and it makes a decision free of politics, we hope. It almost has to give a decent bump to minimum wage earners, given inflation is running at 5.1%. New Treasurer Jim Chalmers on Wednesday said the government would push for a significant increase when it puts its submission into the FWC. But of course, that will hurt business because they have to pay the wages.
Yeah, of course, that's really the other side of the equation, isn't it? Because businesses are paying more to run their operations and then we'll have to stump up more money for employees in really what's already a tight labour market.
Yes, in fact, the boss of Woolworths was talking about this yesterday. Brad Banducci told the Financial Review that he supported a 3.7% wage increase, which is actually the underlying rate of inflation. Now, Woolies has 180,000 60,000 staff, one of the biggest employers in the country, and most would be on relatively low wages. So any increase will really hit profit margins at the retailer. Same deal for Coles. Woolworths is trying to rethink how it uses staff, Mr. Banducci said. That might mean taking people off cash registers and putting them in direct-to-boot services or streamlining roster changes. It's a very big challenge for these massive employers.
Yeah, it's not an enviable position to be in for anyone, really.
No, and given we've just had an election, it's probably less political than it would otherwise be. But for policymakers, it's critical because consumer sentiment, which drives spending, is already being hit by higher prices. Of course, for most of us, we just want policies that can somehow alleviate some of these price pressures.
Yeah, well said. So how did local markets go yesterday, Sean?
The S&P ASX 200 finished yesterday down 0.7% to 7,106 points. The index started the day up before falling in late morning and then again in the final few minutes of trading. Unlike most other sessions this week, the tech sector did well, and the tech sub-index was the only one to rise yesterday. The large caps were poor performers. In fact, there were only 3 companies in the top 25, Westpac, Goodman Group and Aristocrat Leisure, that ended the day higher. Fortescue Metals led the declines, dropping 3.7%, while both Coles and Woolworths were off more than 2%.
All right, we'll be back in a moment with the rest of the day's business news. Well, Sean, after a bit of a globe-trotting start, Prime Minister Anthony Albanese had his first full local day in the job yesterday and said he was increasingly confident that Labor will end up with 76 seats in Parliament, which would give the government a majority.
That's right. The ALP is sitting on 75 with 4 seats too close to call. Brisbane and Ryan in Queensland, Deakin in Victoria and Gilmore in New South Wales. Meanwhile, Mr Albanese said Australia needed to better engage with its neighbours in the Pacific region. The comments came after a leaked draft agreement and 5-year plan apparently being put forward by Beijing to several South Pacific nations, which includes expanded security and economic cooperation. That whole engagement with the Pacific region is the number one issue for Anthony Albanese as he starts his reign as Prime Minister. He also revealed yesterday he has a much better working relationship with Peter Dutton, the incoming Liberal leader, than he did with Scott Morrison.
That's interesting, isn't it? Because members of the defeated Liberal Party are now telling everyone that Peter Dutton isn't the person that many kind of see on TV, that he's actually a thoroughly decent person and not ultra-right.
Yes, the fact that Queensland MP Warren Entsch felt the need to make the comments probably tells a bit of a story in itself. Mr Dutton is the only person standing in next week's ballot. He's certainly a polarising figure, and the question remains open whether he can start to regain the small L constituency that the party lost at last weekend's election. It is interesting meeting Peter Dutton face to face, and I've done it a couple of times, but I don't know him at all really. He is quite charming and he is quite a nice person and good person. Very, very different to his persona in the media. Now, I don't know any more than that. I don't know what he's like when in his quiet times, but you know, a lot of politicians are very different in the media to what they are in real life.
Yeah, I've met him a couple of times as well, and I would agree with you completely. When you meet him, he is a very nice, very polite, very courteous. And I always use as a bit of a measure, right, because I worked in radio behind the scenes, and I would always use it as a bit of a measure of whether someone was as decent to the people off air as they are to the ones on air. And he was always someone that was very courteous to those behind the scenes, and you can kind of read into that what you will. But yeah, it kind of says something about probably the character of an individual.
Yeah, I agree with that. I agree.
All right, moving on from politics, and artificial intelligence group Appen has received a $1.2 billion bid from TELUS International, though there's some rumours the Canadian group may already have walked away from the deal.
Yes, a lot of confusion yesterday. The offer came in at $9.50 a share, close to a 50% premium to the group's trading price on Wednesday afternoon. Yesterday, its share price jumped 29%. It got to $8.27, and then Appen put it into a trading halt. And that's when the rumours started to swirl that the deal was off. The offer does seem like a massive premium, 50%, but Appen's share price has tumbled this year, along with most of the tech sector, and $9.50 is where the stock was trading in the middle of January. In fact, Appen was actually at $40, 4 times that level, less than 2 years ago. Appen's revenue has been hit by lower spending on advertising-based AI projects by the big tech companies, which is a result of global data privacy changes introduced by Apple. The change has pushed advertisers away from some user tracking technology. TELUS is a customer experience IT services company. As we stand at the moment, not quite sure whether that deal is a go or not.
All right, now Miner Yancoal went into a trading hold yesterday. It's had a great run recently, more than doubling its share price this year. So what's the trading hold about?
Well, the speculation is that its major shareholder, Hong Kong-listed Yankuang, which already owns 62%, wants to buy the rest. There are 3 other major shareholders and about 10% of the company is free float, which means you and I can buy or sell it. Where it starts to get even more interesting is that documents filed with the Hong Kong Stock Exchange suggest Yankuang wants to pay a bit over $5 a share, which is well below its current trading price of more than $6 a share. Takeovers normally don't occur when the bid price offered is less than the trading price. Now, Yancoal operates coal mines in New South Wales, Queensland and Western Australia. It will be very interesting to see where it lands.
All right, now, Sean, businesses didn't invest as much as expected during the March quarter thanks to floods and COVID.
That's right, capital spending fell by 0.3% during the 3 months, mostly on the back of a big fall in investment in buildings and structures. Plant and equipment spending, think big pieces of machinery, rose by more than 1%. The data feeds into next week's economic growth figures for the March quarter, and it now looks like the economy expanded only marginally for that 3-month period. There was some good news though. Businesses are planning to spend more next financial year. In fact, intentions are about 12% higher. That's really good news, particularly given all the headwinds around at the moment: inflation, rising interest rates, cost of living pressures, as we're talking about, high commodity prices and falling consumer sentiment. If businesses keep investing, though, that'll be great for the economy.
Buy now, pay later companies haven't had the best run lately, Sean. So an interesting development yesterday with National Australia Bank, the latest company to launch a buy now, pay later product.
Yeah, there certainly seems to be demand for the product. National Australia Bank will allow customers to buy up to $1,000 of goods interest-free with its new product. It's relying on a better exchange of information between financial service providers to help keep a check on credit quality. Credit quality, of course, is one of the Achilles heels of the buy now, pay later sector. NAB's entry into the market comes 6 years after the launch of Afterpay. Of course, it's up against Commonwealth Bank's StepPay, Afterpay itself and Zip. The bank said the product reflects demand from customers.
The Financial Review Rich List is being released today, and once again, Sean, no big surprise here, Gina Rinehart tops the list.
Yes, 3 years in a row for the iron ore mogul. This year she's worth $34 billion. She did lose the title briefly late last year when Atlassian co-founders Mike Cannon-Brookes and Scott Farquhar overtook her when the share price in the tech company soared. But Atlassian's share price has come back a long way. In fact, it's down more than 60% since its peak in October last year. Fortescue's Andrew Forrest is number 2, worth $30 billion, and then Cannon-Brookes and Farquhar are 3 and 4 at $28 billion and $26 billion each.
Who else is in the top 10, if you've got some names there for us?
Well, yeah, they're all familiar names, really. Cardboard King Anthony Pratt and family are number 5. Harry Triguboff, the property doyen, he's number 6. Clive Palmer comes in at number 7. His wealth hasn't been hurt too much by the election because it actually increased by $7 billion to $20 billion, this latest list. Wow. Then comes Canva duo Melanie Perkins and Cliff Obrecht, former boss of Glencore Ivan Glassenberg, and shopping centre king Frank Lowy. Combined, the 10 are worth around $555 billion. Not bad, but Michael, I then went and looked at the Bloomberg Billionaires Index, the one based on the US. The top 2 there, Elon Musk and Jeff Bezos, combined are worth about 450 billion Australian dollars. So this is 550 billion.
So 2 people nearly equivalent to our top 10 richest.
Yeah.
Wow.
Yeah.
That's
incredible.
Some incredible stats. And Sean, Westpac will outsource the management of its corporate super fund.
Yes, it's handing management of its employees' super money to investment consultancy Mercer. Bit of a trend in that sector for corporate funds to be handed to a third party. Better governance and scale matters in that sector, so there's a good reason to do it. Westpac will also sell its advanced asset management multi-asset fund subsidiary to Mercer.
All right, moving on to overseas news, and UK Prime Minister Boris Johnson has told politicians and the public to move on from the latest Partygate crisis, in which new photos show him at a party during COVID lockdowns.
Yes, it just keeps giving this story. An independent investigation by bureaucrat Sue Gray, handed down in the past 48 hours, shows that 16 parties were held at 10 Downing Street during strict COVID lockdowns. Police have issued 126 fines, including to Mr Johnson, his wife and the Chancellor. The Prime Minister said he'd been humbled by the experience. I'm not sure that I could ever imagine Boris Johnson being humbled, but anyway, he said he'd been humbled by the experience and had learnt lessons. Ms Gray's report said there was failures of leadership and judgment at number 10 and the Cabinet Office. The public have been very upset about these parties, basically saying Mr Johnson and his staff acted as if they were above the law. They might have a point.
Yeah, they might. And I just don't think telling people to move on really has the right effect, do you?
No, not at all. I mean, you kind of, in this instance, where obviously they were in the wrong and they went against exactly what policy was and what they'd asked everyone else to do, you just have to do a mea culpa.
Yeah, absolutely right. Now, Apple will increase salaries for workers in the US by 10%, really, as it fights to keep its workforce.
Michael, got to keep all those geniuses happy, no doubt.
Sure do.
Apple faces a tight labour market and increasing unionisation across its stores, and it's trying to preempt job losses. Minimum hourly pay will go to $22 an hour. That's about 31 Aussie dollars an hour. Apple put up pay back in February as well. Apple has about 154,000 full-time or equivalent workers. It's never allowed a union, but worker cooperatives have sprung up in several big companies recently, including Amazon and Starbucks. And judging from management's comments, Apple are trying very hard to prevent a union coming into the company.
And finally, it's clearly a good day for Elon Musk with 2 mentions in Fear and Greed. I'm sure he will be stoked, but he needs to find about $33.5 billion to ensure that his bid for Twitter goes ahead.
Yes, he's bid $44 billion for the social media group, but he's let a margin loan facility lapse. So now he needs to find someone, or a bank or a lender, to cough up almost $34 billion. It might not actually be that much. He's asked existing Twitter shareholders, including co-founder Jack Dorsey, to roll over their equity stakes. The intrigue continues.
It sure does. Now, up next is the Fear and Greed Daily interview with Tom White from Cars Guide.
Yeah, it was a great chat, very much a 101. He explained everything about electric vehicles in Australia, why sales are so slow, what needs to be done, what government needs to do, the different types of electric vehicles, where he thinks the industry will be in 10 years. Great chat.
Yeah, it's a really interesting chat when you consider that I think it was like half of all Australians say they would consider an EV for their next vehicle, but less than 2% of vehicles sold are actually EVs. It is basically a great cheat sheet to the whole world of electric vehicles. So it's up next in the Fear and Greed playlist on your podcast platform or at fearandgreed.com.au. Thank you, Sean.
Thank you, Michael.
It's Friday, the 27th of May, 2022. Make sure you're following the podcast and join us online on LinkedIn, Twitter, and Facebook. I'm Michael Thompson, and that was Fear and Greed. Have a great day.